All right. Right. And make sure that this is not echoing. Right. Test, test. Let me know if you can hear me okay.
Yes, you're good.
All right. Awesome. So we will give it just a few more minutes for people to filter in. We will be talking about income statement today. Of course, we'll do our check-in and then we will dig in. And we will be referencing here. I'll put it into the chat. In case anybody wanted to follow along. All right. Yeah, get started. All right. And again, welcome, welcome. My name is Ryan Knight. We are here with the Small Business Month, celebrating Small Business Month, thanks to Empowered Forex doing the Empowered launch. So 24 days, 24 different keys to business. And today we are on day 21 talking about, oh, so we are talking about, oh, I mean, yes, talking about income statement. So we are going to touch on the cash flow projections, that document, because a lot of the elements that come out in the income statement are typically found in the cash flow projections. The income statement is really the 12-month report that shows what happened for the past 12 months. So ideally, you'll be using your cash flow projections, that spreadsheet, to be tracking every single month. And then at the end of the year, you would have an idea of where your income statement lies. I do apologize for my voice. As you know, the Blue Jays going to the World Series. Don't know if you were watching, but it was definitely a ruckus house. I was yelling my head off as they won that game. So my voice might be a bit low, but I was gonna share my screen. And so we'll be doing an overview of the cash flow projection spreadsheet and then a walkthrough of a live income statement. And then we'll open it up for questions. But really, the income statement is the one of the core documents that when you're going for funding or when you're trying to understand how the business is operating or when anybody else is looking at your business, they're going to look at your income statement. Yes, the balance sheet, they'll reference it and we'll touch on that another day. But the income statement really gives a quick glimpse into one, is the company profitable or not? And also, what elements or expenses or gaps in revenue or cost of goods sold too high it gives a really quick snapshot of how healthy your business is. So as I share my screen, and let me just yeah. All right. So as I mentioned, we were going to touch on the cash flow projections and then do a walkthrough of the actual income statement and then open it up for questions if you had specific questions on what to look for, how to build it for yourself. So the cash flow projections, as we look through, this gives you a breakdown month by month of the cash coming into your business. So the income from revenue or anything else that is outstanding. If you have accounts receivable, it tracks that as well. It would track your startup dollars coming in. So if you are getting a loan, it would track, okay, how much loan dollars are coming in. But then each month, it would be tracking your cost of goods sold. So earlier in the series, we talked about how to calculate that cost of goods sold. So the cost of your supplies and the cost of your labor, which is the two main cost of goods sold categories. And then from that, you would get your gross profit, and we would look at elements of the expenses that you're spending every single month. So typically, there would be startup costs, and then you would track month to month, what are you spending money on. So there might be things that you buy upfront to get the business started that aren't monthly costs, like we saw with equipment. That was not, you're not buying equipment every single month, and equipment is something that would actually live on the balance sheet because it would become an asset for you. But cleaning supplies, again, those we were using the example of detailing nights where we're cleaning cars, so we're using supplies for each car. But as we buy the supplies, that goes in your inventory, so that'd be on your balance sheet. Then as you use the supplies, that is a cost of goods sold. So it would show up on the income statement as a cost of goods sold for doing the actual service. Other elements, again, anything that we found that would be a monthly cost, we'd be able to track it monthly. And then we also created our own elements. So some things that aren't in the startup cost, we would want to capture it so that we can track it monthly. So we were talking about the loan repayment, the marketing, the business phone, or insurance. You could have other things that you're paying monthly. And I always say a good exercise is to actually take your bank statement and look at all the things that you're paying for monthly. So that previous bank statement of the previous month, you could actually use that to then track and see, okay, what are the things that I'm spending money on? And you want to start tracking it in an actual document like this, the cash flow projections. All that to say, at the end, we want to see a surplus. And the surplus, after we go through all 12 months, would have a total. And then this total is what's typically captured on the income statement. So when we go to an income statement, and I'll use one as an example here. So from detailing nights, and this shows 2023, 2024. So you would see that the sales component of the income statement is where on the cash flow projections, we are tracking that each month. So how much sales are coming in, that would go into the sales section. If you got any other funding, you could also put it there. And then that's going to show us the total income for the entire year. From there, we're going to subtract the cost of goods sold. So for us, it was the supplies. So those supplies and the labor, the subcontracted services. So this year, I was doing a lot of the detailing. So we had labor that we were paying outwards. And then I, as the owner, was also detailing. So that brings us to the total cost of goods sold and the total gross profit. So the gross profit is your initial profit after cost of goods sold. So it shows you delivered these many sales and it cost me $65,000 to be able to produce those sales. So from the gross profit is where now you pay all the expenses for what was happening in the business. So you'll see there's a lot of different elements. So when you look at your bank statements and you're working with an accountant, and this is where it's great to have an accountant that works also as your bookkeeper so that they're tracking all expenses. And we work with Sean DeFreitas, uh, Shalom from, oh, sorry, Olusegun is also known as Shalom, but he works with us with ACBN, the Afro Caribbean Business Network. But looking through, again, it's going to take into account counting fees, your advertising, bank service charges, anything like if you're leasing equipment. So these are all the elements that it took to run the business. So now when we add up all the operating expenses, we would subtract that from the gross profit. And if your operating expenses is more than your gross profit, you would be operating at a loss. But if your operating expenses is lower than your gross profit, you're operating at a profit. So of course, our goal is to have a net profit. As you notice, hey, previous year we were at a loss, we had to make some changes, and then we were able to generate a profit. And you'll notice with the income statement, it allows you to start analyzing what you've been doing in the business. So a couple of areas that we started looking at right off the top, we noticed that last year we were spending a lot of money on advertising, but the sales weren't really coming in. Oh, and I think the sales got cut out there. I have to fix that. I think it was around 60,000 in 2023, even though we were spending a lot of money on advertising. So we wanted to address that and really fine tune what we're doing with our advertising. So even though we spend less on, we were able to get more sales from it. And then also analyzing anything else that we're spending money on. And so to make sure that, yes, we're bringing in money, but are we controlling our expenses? So our expenses didn't go up too much, but we were able to execute and have more sales. So that helped with the net profit. A lot of times we might be running our businesses and we don't really track what is happening in the business. So this is where, again, monthly, it's good to be tracking it, but every year when you're doing your taxes, this is the information that your accountant's going to put together for you to say, hey, was this company actually profitable? And if it is profitable, it'll make it easier to go out and get funding, whether it's from the banks, if you're looking for investment, or even if you're looking at grants and they ask for your financial statements, you want these to be done. So I did want to just hop back to the cash flow projections. First, I'll pause there just to see if there's any specific questions on the income statement. And then I'm going to show you where you can adjust in your cash flow projections to then support improving the income statement. And then we'll round out for additional final questions. So let me just check to see. All right. So yeah, any initial questions on the income statement itself? Uh, okay,
I have a
good.
question, Ryan.
Yes, sure.
So hi, how is everybody doing? So Ryan,
Doing well.
now in that income statement, right? When you get like, let's say donation money that's donated, grants, how do you put into that income statement other monies that you may get from other channels? And are you labeling it
Mhm.
from whatever that organization, governmental body gave to you? You would say, you make reference and say, okay, this is the governmental body, this was how much it was, and describe in that income statement what it's going to be used for? Or like, can you put a section in that statement that makes maybe a little note reference to what it is that that individual body gave to you?
You wouldn't need to put a note if your taxes are being prepared, and then the notice to reader, which they call it something else now, but that notice to reader, they could put notes at the bottom, but really it would go, let's say you're getting different types of grants. You would have a line item that says grant funding, or if you're getting donations, you'd have a line item that says donations. If the accountant wanted to break down where the different donations came from, they could put that in a note, or you can have a line item for each one. It gets cumbersome if there's a lot. That way, they usually just bundle it into one. But yeah, you wouldn't have to put the description in the actual income statement itself, but in the notice to reader, they can create a notes for you so that people know where they came from. But it doesn't have to explain exactly what you did with the money and go into detail like that. It usually just talks about who gave the money for you.
So thank you. So Ryan, when you're saying bundle it up, are you saying like every
Mhm.
single grant donation, whatever, on the income statement, you would put it, group it, even
Right.
though it's a
Yeah.
different one?
Yeah, it would have one line item. Like you see here, this grant funding, even though it was 10,000, it came from multiple places. Like I think
Right.
there was two that we got. So we
Yeah.
didn't have to put each one. You could, so that they know, like, hey, grant funding from the Ontario government and grant funding from SBCCI or something. But usually it's just one line item, and then you can have a note that breaks it down.
And everything grouped in that one line item.
Exactly. Yeah, exactly.
All right, cool. Thank you.
And then same with like, so the operating expenses would be the same. Like there's multiple things that come into advertising, but the line item would be for advertising. And then that's where like you'd have to go through your bookkeeping to look at, or your accounting software to say like, okay, what was all the different types of advertising that was done, if a person wanted to know, okay, what, like let's say I'm going to my team saying, oh, we spent 17,000 in advertising, break that down for me. It wouldn't show in the income statement, but you would have it in your accounting software where each of the items were.
Okay, cool. Thank
Yeah, you're welcome. And just before I jump back to the cash flow spreadsheet, yeah, was there any other questions about the income statement itself? Right.
Sorry, Ryan. I have one more question.
Oh, sure, sure.
I'm looking at your sheet, right?
Yeah.
So, and like if we're grouping everything together, are you putting it in what area of the statement? Because I'm looking at your sheet. Oh, so it's the top, because I gotta open up my fingers with my phone. Is it the top section of income? So you would just group everything in there. If it was like 10 items, you would just group all 10 items in that income one spot section there and then total it all out.
Yes, exactly. But that's where your spreadsheet, you could have them all listed out so that you know where the income's all coming from. So when we go to the cash flow projections and we go to the sales forecast, you could
Right.
have each line item here, but then in your income statement, it's all going to just be one line item. It's just going to total into one.
Okay, thank
Yeah, no problem. All right. And so, as I mentioned, when we're looking at the cash flow projections, this is where you want to start analyzing, like it helps you reverse engineer what happened, like why your income statement turned out the way it was. Because just having like the sales figure, and similar to what Anne was saying, you want to know how you got there. A lot of times we'll operate the entire year and then we'll do our taxes, and our accountant will give us this income statement and the balance sheet, and it just has the totals. So you want to know, okay, if we had X sales, how did we get there? So this cash flow projection, this is the template one, but if it was the one that we use for tracking for Detail Ignites, it would show like our King's Detail, our Emperor's Touch, our Majestic, how much in each month did we sell of each, so that we would know why it totaled X. Because the income statement doesn't tell the whole story. So that's why the cash flow projection is really important. because every month you could be checking like, okay, how much did we sell of each of these? And then if one's selling more than the other, or if it's seasonal, you're noticing what months more people are buying and what months people might be buying a certain package. All those things help you make your decisions for your business, but the income statement won't give you the full picture to make detailed decisions about your business. So you definitely want to review it so that you know, okay, this is how we performed, but then you want to drill down deeper into the actual month by month. And some businesses, they check this week to week to say, hey, what was, let's say, our marketing strategy for the week? What's working, what's not? And they'll be able to really fine tune as they go instead of just waiting till the end of the year. So that's where, if we're noticing like our target is a certain amount, we want to know what marketing is helping us hit that target so that by the end of the year, you're well aware of if you're on track or if you're not hitting your quota. But if you only wait to the end of the year to be looking at your numbers, it makes it difficult to one, it almost comes as a surprise. Like a lot of times people will do their taxes and they're kind of surprised on what they see. But if you're tracking as you go, then you'll know more about your business and you can actually explain it to others a lot better than if you just gave them an income statement and said, hey, this is the story of my business. It really doesn't like it doesn't tell the story properly of what you've been doing. So that's why using the cash flow projections to track weekly or track monthly really does help with telling the full story. And then beyond that, as we looked at the expenses as well, this is where you can start to notice if the gross profit is low, that means the cost of goods sold is high. So you can start, oh, actually in this section, you can start calculating, okay, how much am I paying for labor or how much am I paying for my supplies? And when we did our first example during the cash flow day, we noticed that our leather cleaner was the most expensive product that we have as a car cleaning company. So this is something that as a team, we're going to look at, okay, can we find better sourcing for the leather cleaner? Because you notice everything else costs us less than $1 of product to use per car. And the leather cleaner is the only thing that costs us $2 for every clean that we do. So when you're able to analyze the cost of goods sold here, it helps you then reduce those costs and increase your profit. So by fixing and fine tuning your business in this cash flow projections and this cost of goods sold section, that's going to affect the income statement over a 12-month period. So like I said, you don't want to wait till 12 months down the line and you're doing your taxes and then you get the amounts when we could have caught that, let's say in month 2 or month 3, and really reduced your expenses and increased your profits. So just being able to keep on top of the numbers. I know a lot of times, hey, spreadsheets and data numbers, it feels like a lot. And there are great professionals that can support you with putting something like this together or even using accounting tools and accounting software so that all you have to do is just check in, like the numbers automatically feed in and you'd be able to check and make sure that you're on the right track. So stuff like QuickBooks, or we use Wave, but talking with an accountant or a bookkeeper, and I'll say more a bookkeeper than the accountant, and a bookkeeper that will actually explain to you the numbers. There are some bookkeepers that just count for you, like they'll say, "Hey, these are your expenses and this is your revenue," but to actually sit down with you and start to analyze, "Hey, what's going on?" is really important. There's a few that we've worked with. I mean, Faith, Sean DeFreitas, as I mentioned, Camille from Fitness IQ. So if you do want to talk to an accountant or a financial professional, we can definitely connect you to someone in our network. But again, it's worth the investment to at least have a conversation and then to work with somebody that you can check in with on a regular basis. That way you're really on top of your numbers and you don't get blindsided at the end of the year when you're doing your taxes. Oh, I see a hand up. Yeah, and you can go ahead. Oh, did I lose you? Or was that an old hand? Oh, and
Sorry,
you're
I
all good?
muted myself. My bad.
Oh,
What do you think? I'll repeat that. What do you think is the most user-friendly software, cheapest, any free downloads? Because it is good for entrepreneurs to understand this on their own. Because some, like you said, some accountants, they're not explaining people, they're just number people, right?
yes.
So
And
it's, yeah, go ahead, Ryan.
a really good one that we use is Wave.
Wave.
Let me.
Is it expensive, Ryan?
No, it used to be free, and
Mm,
then you only had to pay if you needed like the payroll services
mm,
or the POS system.
mm,
Now I noticed that you do have to start paying pretty early. There is still a free option.
mm.
So you'll see the starter plan is $0. So I
Okay.
usually encourage people to start with Wave. When we do our youth entrepreneurship programs,
Yeah.
we always show Wave because it's free and you can just start doing your invoices. But if you
Okay.
wanted to like connect your bank account, I think
Yeah.
you have to pay for that. Before it was free. If
Right.
you want to like email invoices directly through the platform, I think that's an additional fee now, but
That's cool.
it's still worth it. I think $25 a month is definitely still cheaper than QuickBooks.
Yeah, I
And
agree with that.
yeah, you only have to bounce up when you need some additional stuff.
Oh, and isn't an app you can find in your store, Ryan? Wave?
That's a good question. I'm pretty sure you can let me know if you find it, but
Yeah, I'm
I
gonna look at
usually
my
use the
Apple
web
store.
version. I haven't been using the Apple version of it.
Oh, so you use the web version, did you say? Online?
Yeah, exactly.
Not a fan of online. So much hacking. I'm so paranoid about those things.
Oh no.
So I try to
Yes,
use
yes.
apps. But you think if I don't find an app, then I have to go to what website, Ryan? Can you put it in the chat?
Yes, actually I'll copy this one.
Thanks.
This is Wave. Oh, nice. And Alexia says that she's using QuickBooks. Oh, 27 a month is great. So that's the QuickBooks Online.
I use a person, but I really want to get a soft.
Oh, which is the one that you use then?
Like I said, I want to get I use a person, like one of my really good friends. We
Hmm.
went to school together. He's pretty good. But I want to actually just get a software, you know what I mean?
Right, right. Yeah, because I see QuickBooks. I know they don't have a free version, but it starts at about 14 a month. They do go up to 47 and all the way up to 76. And a lot of times, if you do work with a bookkeeper and accountant, they typically have access to QuickBooks and can give you a better rate as well.
Oh, okay, gotcha.
So if you're going to work with somebody, yeah, that sometimes helps you save on QuickBooks. And I noticed because Intuit now owns so many things, they own MailChimp as well. So I wonder how they integrate that. I haven't tested. I used to use MailChimp because it used to be free as well. And now it's very limited on their free.
Okay.
I don't even think, I wonder if it even exists anymore.
Is
But
that MailChimp, Ryan?
yeah, MailChimp. Remember you
Oh,
used to get 2,000
yeah,
contacts for free?
true, true. They want people to pay now. That's the thing.
Yeah,
Like, no
everything
more
is
free
they
people
shifted.
pay.
Absolutely. All right, so let me stop sharing. I did want to open it up for questions. Yeah, today was more of a quick overview of the income statement. I believe tomorrow we're going to do the overview of the balance sheet. And then as we wind down, we have just 3 more days left for this series. If you know anybody that could use this information, wasn't here, we are going to bundle it so that when we're working with entrepreneurs, we can just show them, hey, these are the different videos that would be helpful. So the classroom, I would say the platform will be available. And yeah, feel free to share it with other entrepreneurs that you know. And then be sure to book a meeting with Chris Beth. She's great at initial consultations to figure out what stage of business you're in, and then seeing how Empowered Press can support as well. If you haven't done the business needs assessment with ACBN, the Afro Caribbean Business Network, that's also a great place to start because you'd be able to let us know what support you need. One of our business advisors will call you, and then we can figure out how to plug you into one of the supports that exist, whether it's funding, marketing and sales, or operations. The support is here for you. So we definitely want to make sure to plug you in. And yeah, looking forward to the session tomorrow. But just before we sign off, if there's any final questions or general questions that you've been thinking about, feel free to ask. Um, we are here for you. All right, awesome. Well, as I say, I will let you enjoy the rest of your afternoon. Looking forward to seeing you tomorrow at 3 o'clock as well. And let me just confirm that the next session is the balance sheet. Yes. So tomorrow we are balance sheet, and then Thursday, how to improve our cash flow. And then the last day, which will be Friday, we are talking about the executive summary. So we're going to bring everything that we've learned into one final executive summary that we can use. So always good seeing you, and I'll see you tomorrow at 3. Have a
Thank
good
you,
rest of
Ryan.
the day. No problem. Thanks, Em.
All right. Bye bye. Good one.